it's time for a quarterly chat with the top management of Wipro, and the top team joins us, the CEO, the COO, the CFO and head of HR, to get understanding of what transpired for the quarter gone by and what is the way forward for FY16. Gentlemen, good evening. Thank you for joining us. TK, I'm surprised with the smile on your face because Q4 was a tough quarter for Wipro. It's hard for me to sugarcoat that quarter because Wipro is now growing at a run rate which is lower than the industry average.
Cash flow. Our Q4 cash flow was running at 112% of net profit. Our full year cash flow is running at 92% of our total net income. So it's been a good year in terms of deal flow, or a good quarter in terms of deal flow, a good quarter in terms of operating margin, a very decent quarter in terms of cash flow. The one area that we've had a surprise on is top line growth. And that's primarily been driven by our oil and gas business. Our oil and gas business has really declined in the last quarter, and it sprung a surprise far more than what we had initially anticipated. To that extent, that affected us last quarter. We see the impact of that carrying forward also into this particular quarter. So to that extent, I think that softness remains. The good news is that we are winning deals. We have won 2 deals in Middle East and Asia where we are consolidating out existing vendors out of the customer base, which is positive. We have won a 3rd deal in US where again we have done the same thing. So we are seeing that traction kind of improving. So that is very positive for us. So overall, if you look at it, outside of oil and gas, and if you look at all the verticals, I think healthcare, manufacturing, and retail. If you remember, retail was a bugbear for us for 2 years. Right now, we see retail coming back very, very strongly. And so these 3 verticals would do well for us. If you look at BFSI, in the next quarter, we have a little bit of softness relating to a specific customer. But after that, we think we'd be okay. But oil and gas is the big unknown for us. We don't know where it will finally go for at least 1 more quarter. The good news is that as the consolidation deals start playing itself out, we should see some recovery. But that's the one that we are, right now, it's difficult for us to call in a manner whereby we can be kind of cohesive or even accurate.
So TK, let's talk about your guidance for Q1 for IT services. It talks about a contraction or a flat growth. So what are the key assumptions? Are you assuming that the BFSI vertical, the energy vertical will continue to contract?
So our guidance is pretty clear. Our guidance includes a clear decline in growth for the energy business. Now, if that decline doesn't happen, we are lucky. If it does, then guidance is what you get.
Jatin, so let's talk about the silver lining. I've criticized TK for a slowdown, but let's talk about the good news, which is that despite cross-currency headwinds, margins are stable. In fact, margins are north of 24%. What are the key drivers there? Do you have enough operational levers in place? And if cross-currency headwinds don't persist, what will happen to margins for FY16?
We always say that we will remain focused on the growth as the priority one for the organization. And people are very critical from growth standpoint. And we will have our salary increases from 1st June. And that will play out on our margins for first quarter. And with that, there will be obviously quarterly volatilities associated with it. But yes, in medium term, we do see a potential to move margin even up. In Q4 last year, our margins were 24.5. So clearly, this engine has delivered and can deliver margins which are on a better trajectory from here on.
Saurabh, I have lots of questions for you, and the first and the most important question at the beginning of a financial year is about salary hike. When is the next salary hike due, and what will that do to the margins?
Our increases will be in line with the industry. We have not decided on the exact number, which we'll decide closer to the date and announce it. But it will be in line with the industry, differentiated. We'll also go with a promotion cycle happening in the beginning of the year, in June. As far as attrition is concerned, attrition in fact for Q4 has come down by 80 basis points. If you look at the entire people supply chain, our utilization has improved, our attrition has come down, and we have seen hiring net adds happening. So it's a very robust process which is going on right now, and we see that playing out as we move forward in line with the business requirements. So from an attrition standpoint, from a hiring standpoint, utilization and salary, that's what the thing will play out.
Saurabh, I guess no one is surprised that Rishad Premji is part of the Wipro board. However, everyone is surprised that it took him just 8 years to be part of the board.
As you said, Rishad represents the shareholding on the board, and he has been in the company for the last 8 years doing various roles. He was in investor relations, he's done some acquisitions, strategy, and I think he was groomed over a period of time, part of TK's management, Wipro's management team under TK, and will continue to do that work. He has been part of the board deliberations as an operating team along with TK, and some of us are there. So it is just that he's there from a shareholding perspective and representing Wipro and interest. Nothing else changes on a day-to-day basis.
Okay, Abid, this question is for you. And finally, Wipro has a COO, Chief Operating Officer. What will be your role? Would you be working cross verticals, or would you be pursuing specific verticals? And what are your plans to revive Wipro?
So Nikunj, today is the 21st day that I've joined. Right now, I'm imbibing the spirit of Wipro. I'm meeting people, highly professional people, as TK mentioned, very technologically oriented. I've been interacting with customers who place a very high level of trust with the organization. Very innovative and very entrepreneurial in nature. I think I'm very excited to be here, and the thrust for me would be to be able to help drive growth within the organization. So the growth has two parts. One is as our customers' needs are changing and as they go into transformation and digital transformation especially, I help TK focus on that part of the change the business or the future of the business and take charge of the run. While there is immense opportunities in run the business as well. For example, account mining, and especially if you look at it, the way technology will be sold going forward is in terms of integrated services, stacks across process, application, and technology. And here is an opportunity with all the service lines coming together under me to be able to create those stacks and take offerings and services to our customers. Both help us hunt new accounts for the hunting team, help our digital transformation teams deliver and execute on the reimagined process, as well as be able to effectively mine the large set of existing accounts that we have. And that will be my area of priority.
Gentlemen, wonderful interacting with you. Thank you for joining us, and we hope to interact and see much more of you going forward in FY16.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.